if you can enter into a point in the market wherever you are, whether you're an investor or even a primary buyer, right, primary homeowner, you're going to be able to buy at a price that you probably won't be able to get again in the future once rates drop. So this is if anything, it's like, a great entry point.
Alrighty, folks, it's the day after Fed Day, and I think a couple of things are starting to settle into the market. A, the chances of rate hikes have been removed. Also, I think the market is starting to realize that the chances of multiple rate cuts is dwindling away. Higher for longer is here. Inflation is proving sticky, but what the heck should we be doing with real estate? I think it's actually good news. I think a flat market around interest rates allows things to settle down and allows us to do the work. We're going to talk with Jonathan from Convoy Home Loans because maybe I'm just smoking crack and I'm out in left field. Jonathan, what are you thinking? Day after Fed Day, what's going on?
I mean, obviously the markets are reacting. And I'm getting so many calls today because obviously from 2 days ago, the market dipped.
Mm-hmm.
But I sent an interesting chart actually to a client last night because he was like, "Hey, I heard the market dropped today. Can I get a lower rate?" And I said, "Look," and I sent him the 3 month of the federal or the 10-year treasury. And
Mm-hmm.
I showed him that it's basically a flat line almost. It's like up, it went up, and then we're just bouncing in this little range right here, right?
Yeah.
And I was like, so if you're talking about dropping, it didn't really drop, right? It looks like it dropped just because you're comparing it to the price of yesterday. But if
Mm-hmm.
you actually look at it take a step back and look at it, the market is actually still up, right?
Mm-hmm.
So I think people are just wishing and hoping that rates would drop. I think it's just wishful thinking,
I
right?
agree.
That they're like, rates drop, like, yeah, rates are going to drop, like, this is the time. But then day later, it's going to pop back up. And I think personally, I don't know if you probably saw the chart too, but like the 10-year treasury back in October of 2023, which was the
Mm-hmm.
highest point in like what, over a decade for
Yep.
rates, right? I think we're headed back there. I think
Could be.
because we're only like 20 to 30. At one point, we were only 20 basis points off from October
Right.
highs.
Yep.
And now we're what, like maybe 30 basis points off from
30,
October highs.
31. Yeah.
So it's like the difference is not that much anymore. And I think there's less of a reaction. Obviously, when last October everyone was freaking out.
Mm-hmm.
And now they're like, okay, this is kind of where the rates are going to be, right? And
Yeah.
if it drops, it drops. If it doesn't, doesn't. But to your point, and we've kind of been talking about this, rates probably won't drop this year, right? I think it's basically almost a given that it doesn't drop. And we've been talking about this for a while. I
Mm-hmm.
think what rates do is bounce around this range and gives
Yeah.
opportunities to, especially for investors, to buy properties potentially at discounts, to buy
Yep.
properties potentially with, equity built in. And that's kind of the only way that we can kind of move past this market. And this is
Yeah.
an exciting time for investors, obviously.
Yeah. I think it's really interesting. I think you're absolutely right. I think the market was conditioned to hope for rate cuts, anticipating them. Everybody was talking about rates going below six. Some people were talking in five, low fives. I'm like, where is this coming from? But the good news is, I think to your point, we are where we are. We're kind of in a range. It's very likely, given what the Fed did yesterday, we're going to be in this range for a while. And you know what? A flat cost of capital, meaning not these great gyrations, not the worst thing in the world. I think it will force some people to sit on the sidelines because not everybody will get a yes answer at 8% or 7% or whatever it is. But the ones that do the work, they follow up, they look at days on market, they write disrespectful offers, they know their numbers. This is the time where doing the work pays off, frankly. And I'm excited for what's coming because I've been said it, I don't want rates to come down. I think rates coming down is actually a gigantic problem in the near future. I think rates settling here for a year or so would be okay in my book.
Yeah, and we're already halfway through the year, right?
Yeah,
Almost
good
basically,
point.
right?
Good point. Yeah,
So it's like it's already May, right?
yeah, yeah.
And if you're talking about like people freaking out over the year and rates being high, it's like, hey, everyone, we already got past basically half the year with rates being where they were. So what's another 6 months, right? We're not
Point.
talking about another year on top of this, right? We're talking about through the end of this year, where if we stay where we're at, that's almost like you say a healthy point for us to be at,
Mhm.
especially as investors. And if you can enter into a point in the market wherever you are, whether you're an investor or even a primary buyer, right, primary homeowner, you're going to be able to buy at a price that you probably won't be able to get again in the future once rates drop. So this is if anything, it's like, a great entry point for a lot of people to be able to buy. It's like when COVID first happened and the stock market did this, right? That
Yeah.
one March, April. It's like that's the same point where if you actually jumped in at that point, you made a lot of money on that jump back up the next month, right?
Yeah.
And I feel like obviously real estate doesn't move like this as much, which we're thankful for, right? Because we'd all lose our heads if real estate is in a state where we might actually now be at a point where we stabilized that potential what could be the bottom,
Hmm.
right? What could be. So if this is the bottom, then why wouldn't you do the work to invest and buy right
Hmm.
now to capitalize on all the gains later, right? Because you're
Yeah.
not buying for today, you're buying for 5 to 10 years from now.
Yeah. Yeah, it's definitely I talk all the time. The wealth journey is the third and final step is it's a 10-year journey, right? You've got to make sure it pencils day one, but the art of getting wealthy is 10 years, right? Let inflation be your friend. Inflation's a feature, not a bug. Mortgage pay down, all of that. It's really powerful stuff. And again, a market that is slowing down is actually good. We've been running at such a rapid pace for so many years. It's going to feel like we hit a wall, where in reality we're just going back to normal, right? When you're going 100 miles an hour and you slow to 50, you feel like you're standing still, but you're actually moving at a pretty good clip. So I look forward to what's coming. Again, I got 20 years on me, so I could, I'm used to this kind of wild swings. But let's talk about some investor loans, right? DSCR loans, bank statements. There's lots of ways to get stuff done if you could find a great deal.
Yeah. And right now, that's, I think, more popular than not because a lot of W-2 people are being priced out of the market. And
Mhm.
I think the only people that are really able to have enough flexibility with capital is self-employed borrowers, right?
Mm,
And real estate investors that have a lot of cash and capital built into their properties or something else where they could pull from one, move it to another, pull from their business, move it to another. And bank statement loans, obviously we've talked about it in the past. All of my clients that are doing the $10 million houses and $15 million, like everyone that buys in that range, they all buy either using a bank statement loan or a P&L loan. P&L being
mm,
profit and loss loan. So the ability to be able to purchase goes up significantly when you fall into the range of bank statement or profit and loss because you don't need to use tax returns to qualify, right?
got it.
So that's the main thing that a lot of people are doing right now to be able to buy properties that they wouldn't typically be able to buy with a traditional conventional loan, right? On top of just the SCR, right? Because bank statement loans and profit and loss loans are still better priced than DSCR loans in the non-QM world, right? Because it is still income qualifying. It's less income qualifying, but it still allows you to have the benefits of non-QM and being able to purchase bigger, which means that you're going to be able to, like, if you're trying to invest your money and buy something for 25% down, maybe in conventional loan, you could only buy like a $400,000 property, but with a non-QM bank statement loan or a profit and loss loan, you'd be able to buy something at 1 million,
Mm,
which kind of increases your buy box double
mhm.
for the properties that you can look for, right? So that's kind of like been the range of products that clients have really been going into, especially being that conventional investment loans are obviously up in rate. Everything's
Right.
high. They're all like high sevens, potentially
Yeah.
low eights. Like it was crazy because I saw the other day, yesterday, I was pricing out a loan for a client on conventional versus DSCR, and DSCR obviously without buying it down, whatever was like 7.5 for 25% down, and conventional same program was like 7.75. So
Mm,
it's like we're still looking at that kind of difference in rate. So it really depends on what the priority of the client is, right?
right.
And I've had clients tell me like, well, DSCR is too expensive, right?
Mm,
And it's no lie, it's a more expensive loan, right?
sure.
But there's benefits beyond just the cost right now. So I was explaining to a client like this. It's unrealized gain. You don't
Right.
realize what the benefit of it was until you need it, right? So I think that that's kind of like the mindset shift that people have to do because obviously you understand this. A lot
Mhm.
of the other millionaires on the channel understand this. It's there's different ways to make deals work that are not just the traditional way because the traditional way puts you in a box. And if you don't fit
Yeah.
that box, that's it. You're limited to how much you can grow inside of a box.
Yeah.
But what this program does regardless is it allows you to expand beyond the box and increase your buy box to a different range where you
Yeah.
can actually double, triple your money, despite the loan being slightly more expensive, even whatever the rates are doing.
Yeah.
So there's value to that that you can't really put on a certain dollar amount, but it is still worth it most times for a lot of clients that again are self-employed or real
Mhm.
estate investors. Like this allows them to buy and continue to expand their portfolio. OPM is the most powerful thing that we've ever had in our lives, right? And that's exactly the power of what we're doing here is like you have to use OPM because cash for everything you can only get so far, right?
Yeah. OPM, folks, in case you don't know, is other people's money.
Yeah.
This is really the key. It's funny. I'm actually doing a presentation this weekend at Northwest Action Summit, and we're talking about two things that turbocharged Olivia and I's portfolio. One is private money, and the other is seller financing. You're absolutely right. Other people's money is it's like it's the way to turbocharge your portfolio. You have to understand it. You got to know the risks and all of those things. But the reason I love talking to you and Dustin every Thursday is because Convoy is like a Swiss Army knife of lenders, right? You can obviously do conventional if that's the right thing. You can do, all these other DSCR, non-QM, bank statement, so on and so forth. But the beauty that you guys do for this channel is you or Dustin take the phone calls, take the leads. So if somebody wanted to reach out to you and say, hey, here's my unique situation. Can you help me? How would they do that?
Go to convoyhomeloans.com and let us know you came from ORaaT.
Yes, folks. Again, you got to tell them you came from ORaaT. That gets to Dustin and or Jonathan. Otherwise, you get saddled in a queue and nobody wants to be in the queue. All right, guys. Thank you very much, Jonathan.
Thank you.